Welcome to the Fear and Greed Afternoon Report for Monday, the 22nd of May, 2023. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 0.2% today to 7,263 points. Not for the first time in recent sessions, technology stocks led the way, followed by energy and healthcare companies. At the other end of the market were the real estate investment trusts and the telcos. Among the large caps, WiseTech Global was up another 2.5%. Now, the tech market leader is up nearly 50% this year and has doubled since June last year. Santos rose more than 2% today, while fellow oil and gas major Woodside Energy jumped 1%. Some of the lithium miners underperformed. CSL, Xero and Suncor were all among strong performers. The big banks were lower, as were Telstra and the large retailers. Story number 2, the share price of payment system provider Tyro tumbled 17% today after its suitor, private equity group Potentia Capital, walked away from the deal. The initial offer was made in September last year at $1.27 a share. That was rejected, and eventually Potentia lobbed a $1.60 a share bid, having one large shareholder, Mike Cannon-Brookes, support. The private equity group was undertaking due diligence that began late last year. Now they've pulled the pin. According to media reports, as of late last week, investors were confident that the deal would get done at a price of around $1.75 a share. It seems that the bidders just didn't want to pay as much as they did a few months ago. Certainly economies have slowed. That wouldn't have helped, though Tyro itself updated its earnings forecast just last week. Maybe it just took too long to get the deal done. Story number 3, BHP has warned that the Albanese government's proposed same job, same pay laws will cost the big Australian up to $1.3 billion annually and could cause labour hire demand to tumble. The same job, same pay policy is designed to crack down on worker exploitation by labour hire firms and is part of Labor's second wave of industrial relations changes to be introduced later this year. BHP today warned that without proper consultation, the reforms could discourage enterprise bargaining, drive inflation, undermine productivity, threaten jobs and undermine the government's recent bargaining reforms. Federal Employment and Workplace Relations Minister Tony Burke hit back immediately, saying it was unclear how BHP has produced a costing on legislation that hasn't yet been finalised or written. BHP said the $1.3 billion financial impact was equivalent to the labour cost of approximately 5,000 full-time employees across its operational workforce. Story number 4, the scandal embracing PwC is getting worse, with Federal Treasurer Jim Chalmers describing the leaking of confidential government information to benefit the accounting firm as inexcusable. Chalmers told ABC Radio earlier this morning that Treasury was working on adopting additional measures to crack down on the leaking of confidential government information by consultancies. He said the PwC experience is deeply, deeply troubling and he'd have more to say on changes in the sector in due course. A PwC partner used information gained by working with the federal government to further PwC's interests, despite signing confidentiality clauses. That partner, Peter Collins, has been deregistered, but there is pressure growing to further punish PwC. And just as an aside to this story, the Sydney Morning Herald is reporting that the big 4 consulting firms, which includes PwC, have increased their federal business by 400% over the past decade. And, not surprisingly, political donations have steadily increased. And finally, story number 5, the debt limit talks in the US continue now that the President Joe Biden is back home. That's the main story. But the G7 meeting in Japan over the weekend also had an impact on markets. Biden said relations with China should improve very shortly, and that sent equity markets higher. Equities in Hong Kong, Japan, South Korea and mainland China all rose today. The odd one out, really, was Australia. In commodity markets, oil is lower, as is gold. Coal's downward trend continues, though at $160 a tonne, it's still well above its long-term average, and the Aussie dollar is trading at just under 66.5 US cents. That's it for the afternoon report for Monday, the 22nd of May, 2023. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, Twitter, and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.